Okay, so we're doing another video, and this video is on our investment in Meta. So let's get it going. As I just mentioned, this is a video on our investment in Meta. So we used our new investing system to analyze Meta, and subsequently we bought shares in the company. And if you don't know about our new system, you can check it out we can put a link in the description to, because we made a video explaining the new investing system that we developed and that we are currently using to find investments. And in this video, we'll walk you through some of the points that made us invest in Meta.
Right, on to the next slide. So, um, as mentioned just now, we used our new investing system to um, invest in Facebook essentially, or to decide to invest in Meta. And in this new system, we look for good companies that are selling for a good price. Um, and we go through a checklist of factors. And if a company scores high on those factors, we'll conclude that it's a quality company. Some of these factors include a growth in revenues, a growth in net income, and whether the company has a good return on equity and whether the company has low debt. There are other factors too, but these are some of the ones that we look at. And afterwards, we'll look at a company's past financial results, whatever history we've got available, and then we'll plug those into our valuation models to give us a valuation. Now, these valuation models, they are quite prudent. So if they do say that a company is undervalued, the chances are that the company is selling at a really good price. And our focus is mostly on the numbers with this approach, and we don't do as much qualitative research in this process. That's because with this one, we feel more that the numbers are going to tell most of the story. And when you look at the numbers, it's less emotional. We're not going to feel biased by trying to read tons and tons of annual reports, for example. And we do accept that as a result, this method will have its limits, but we're trusting that we're going to be more right than wrong. And if we do build a diversified portfolio using this method, then overall, we hope that returns would be good.
Okay, so let's get into why we chose to invest in Meta. So it scored high on our factors. So basically, we concluded that it's a quality company. So, for example, the revenues have been growing at a very high rate over the long term. So, as you can see from the chart here, the revenues have been growing at a very high rate. So, they were 777 million in 09, and then in 2022 there were 116.6 billion, which is obviously incredible. And I just want to point out here that we invested in Meta in August of 2022 and also again in October of 2022. So we actually didn't have the 2022 numbers available. Just want to point that out when you look at the chart. And then in a similar fashion, net income has been growing a lot as well. Here we can see the growth in net income. It's slightly more volatile than revenues. And as I just pointed out, it's important to note that we don't have, or we didn't have the 2022 numbers when we made the investment. So obviously we can see that the net income fell a fair bit in 2022, but we already knew about that when we made the investment. So we had already accounted for that. And we felt that a lot of that was built into the share price. And also, we're not too afraid of investing in companies that see their net income decline for a year or two, because that is very normal in the investing world. Right. So moving on to return on equity. Return on equity has also been pretty solid over the longer term. We can see often it's in the 20s or in the high teens, and it's been positive over the whole period. So this is a return on equity chart that we feel looks very strong. And lastly, this is the chart of debt to equity, and we like to look for companies with low debt to equity, and it's currently only at 21%. So we kind of have a max threshold of 100%. So Meta is well within that range. All right, so those are four of the factors that we use to analyze Meta. But our factor investing checklist is much longer than that. But we don't want to share all the factors because that is our intellectual property. But this just gives you kind of a flavor of what we look at to determine if a company is high or low quality. And then moving on from that, to get a fair value estimate of the company, we used a discounted cash flow model to estimate what we feel is a prudent fair value estimate, and that figure was $170 per share for Meta. And this was an estimate that we came to in August of 2022, and then in that month, August 22, we bought shares for $168, which was 5% of our model portfolio. And then in October of 22, we bought shares again at $99 when the share price had dropped quite a lot, and we allocated 2.5% of the model portfolio. And just to be transparent as well, we personally bought at 168 in our personal portfolios in August of 2022. But then when the price fell to 99 in October 2022, we didn't actually have more money to invest. So we didn't actually buy more in our real portfolio, which sucks, of course. We could only buy in our model portfolio because that's fake money, but that's kind of the reality of not having too much money. It's shit, but it is what it is.
So, what about the metaverse controversies and the declining profits? So, as mentioned earlier, we focus more on the numbers. So, overall, we don't really care too much about these sorts of controversies. And based on the financials we've just covered, we think Meta is a very good company, and that's what matters in our investing process for these sorts of companies. And we bought shares when a lot of the negative news had already been factored into the price. And as such, we tend to ignore like the company news and other different headlines because they can really sway your opinion. You can end up being very optimistic about it or really pessimistic. And we're only human, so things like that will cloud our judgment. And even if the company ends up losing a lot of money on this metaverse project and it turns out to be a complete shit show, the core of the business is still in place, intact, and we believe it will generate a lot of profit over the long term.
All right, so to conclude this lovely little video of ours, we used our new factor based investing system to analyze Meta and bought shares in the company at $168 per share and $99 per share. Now, that was in our model portfolio. We only bought shares at $168 in our private portfolio because we didn't have enough money lying around to buy more. And despite the recent negative news, we still feel that Meta is a good company because it has a history of strong financials, and the valuation was very attractive when we bought. And we might be wrong about Meta because as we've been honest about, we only looked at the financials. We didn't do a deep dive into the qualitative factors. But our goal is to build a diversified portfolio of quality stocks by using our system, and Meta meets our criteria. Now, by using the system to build a portfolio of diversified stocks, we know that some stocks we will be wrong about, and some stocks we will be right about, and Meta might be one that we are wrong about. But on average, we hope to be more right than wrong. And Meta met the criteria of our factor based system, and we bought it cheaply. So it made a lot of sense to buy it when we did. And that's basically it. So that being said, thank you for watching, and see you next time. Idiot.